Welcome back. You're with us on Trading Hour. Let's talk fundamentals now. As promised, we have Unmesh Sharma of HDFC Securities joining in to talk about the market and the way ahead. Unmesh, thanks for being with us. So it's been a very interesting ride. Markets back at 20,000. Sum it up for us. I mean, the clear takeaways that you got from the second quarter earnings season. Do you think we have enough earnings momentum, enough earnings fuel to decisively go past the all-time highs?
Okay, so look, sum and substance of everything we saw in the second quarter is that actually, while yes, there were a few disappointments, especially in the IT space, generally earnings haven't actually moved much. So if you see the move that has happened, we have a slight upgrade, I think, on earnings on 24. In 25, it's more or less exactly where it was. What has, however, happened is that the mix has changed a little bit. I think the one big decisive factor which came in this quarter was the fact that there is, the commodity price inflation, or rather deflation, is still showing up in numbers. What that effectively means, however, in our view, is that that is also to some extent the end of that benefit. So going forward, it will depend on how volume growth plays out. But at the same point in time, I think earnings growth for FY24 looks like rock solid and delivered. If you include the energy basket, it is over 20%. So that is very exciting. And without, even if you leave out energy out of that, FY24 and 25 will see teens growth on earnings. So if I look at it from top-down perspective, teens growth with FY25 earnings, PE multiple at around less than 18 now, given the rollover factor. I think we are in a good place from that perspective.
So no risk to FY24 EPS estimates, at least consensus EPS estimates. What about Tata Tech? Unmesh, wanted to get your thoughts on Tata Tech and the current market price of 1,300. If someone has not gotten allotment, what should they do?
Unfortunately, we don't cover the stock, plus it's listed today. So, we are not BRLMs on this, but at the same point in time, not able to give a view on that. I think the one most important thing, I think, on Tata Tech, as well as all the other IPOs which came through, and to be honest, it has caught us also by surprise. We already knew that there is a very strong participation in markets, especially from domestic institutions as well as domestic retail and HNIs. But if you look at the subscription numbers and you put all the numbers together for the 5 IPOs which have happened, I think this liquidity is quite amazing. And I think what is the takeaway really? How do you read that? Is the fact that there is so much money on the sidelines, willing to invest in high quality companies, especially where you have visibility on earnings. I believe, it strengthens our view that, of course, there will be certain pockets where we could see some corrections, but broadly, it strengthens our view that market's not coming off a cliff anytime in the near future. So I think that it goes back to saying that if you have good companies delivering earnings, reasonable valuations, I think this is a good time to invest.
Okay, Unmesh, also lots of new ideas are coming to the market, right? Tata Tech, in that sense, is not new. I mean, it has some listed peers already. But the market seems to be really hungry for new ideas relating to digital or relating to technology. Whether it's, the recent listing Protean, for instance, which is doing a lot of the back-end work for Aadhaar, KYC, etc., or, a company like NetWeb. And then, of course, you have your Zomatos and, PB Fintechs of the world. How do you look at this entire new technology, digital spectrum? And, are there any stocks that you're liking here?
Yeah, so on the new technology, we've been very old school. Actually, this is a good time as any to remember, Mr. Charlie Munger, because finally fundamentals win, right? So if you remember on this channel, we've had this discussion now for about 3 years. And we used to always say that we look for cash flows. Honestly, my answer hasn't changed, and I think this is as good a time as any to remember. What we like is actually we believe that in the tech space, the enablers where we have good visibility on cash flows. If you look at our, we used to have these exchanges, for example, in the tech space. In there, we continue to have MCX, for example. We continue to like names like CDSL. So, the market infrastructure where you have clear visibility on cash flow, rather than the B2C, which is where, you are not really sure which way it'll go. where the winners and losers are not clearly defined. We prefer that type of space. So if you look at the tilt in our tech basket, which we have in our model portfolio or even otherwise, the way we think about it is we prefer monopolies, duopolies. We prefer companies which have value, which are a little bit more boring than these, less media coverage in the media, so as to speak. So at this moment in time, I think we have MCX plus we have some, buy ratings on things like BSE, on CDSL. That's what we prefer to play in the tech space, somewhere in the middle rather than playing neither the large caps and nor the B2C kind of untested hypothesis. That's where we are.
You've definitely, caught the sweet spot. And since you mentioned some of these stocks, when you look at BSE, 350%. What's really going on? And with this kind of a rise, do you think, things are getting a little excessive? And or whether this kind of a price move, is it really justified on a stock like BSE?
Okay, tough one. Look, so BSE, we have covered this for a long time. Our analyst Amit Chandra has been deep into this stock, and I think he's caught it very early. And at this moment in time, honestly, while we continue to have a buy rating, we've removed it from our model portfolio because honestly, it may have gone ahead of itself a little bit. But at the same point in time, look, the underlying story, if you look at the way in which the price increases came through, had no impact on volumes, and rather it's gone the other way. On top of that, the structural story of them, catching up on market share. I think. So while we are positive on the entire space, so while NSE is unlisted, at the same point in time, we like the whole exchange space anyway because of market participation. But relatively within that, we continue to remain quite positive on BSE. So will it continue to give you a very serious multiple re-rating in the near term? Probably not. But at the same point in time, longer term, underlying market participation for all of these, BSE, NSE, MCX, all of these is positive. On top of that, there is the possibility of improvement in margins because their rates are lower than the competitive exchange, and then on top of that is the market share gain. So yeah, we continue to remain positive on this.
Thank you, Unmesh, for joining in. By the way, one more stock, BHEL. Day after day, BHEL was dormant for a very long time, but look at the way it's come back to life this year. Today, it's up 5%. This week, it's up 14%. This month, it's up 44%. And this year, the stock is up 120%. So there is no stopping the rally on BHEL just yet. We will slip into a very short break on that note. When we return, we'll invite the management of Gandhar Oil Refinery. They too have seen a very strong debut on Dalal Street. Ashlesh Parekh, the joint MD of the company, will join in on the other side.